is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and we got markets right near record territory. A little bit of mixed action so far this morning. You have the S&Ps trading to an all-time high of 44.44. First time I've ever said that. S&P's record territory. That made it about 7 a.m. this morning. We've pulled back a few points in the last couple hours, still sitting basically right where we traded to right out of the gates yesterday. You see the S&P's. I got a 15-minute bars up here on candlestick charting on the Thinkorswim platform. We trade up to about 44.42. As of 9 a.m., that's actually 8:30 on the CPI data yesterday. You trade up to this level. We've been chopping around within a few points. Very little volatility right now in the S&P's. Tech stocks, NASDAQ 100. Backing it up. So we have Tuesday's action. Look at this volatility, right? Tuesday's action, we get it almost all back on the CPI data. That's your 830 bar in the NASDAQ 100. We jump up to 15,100. A little bit of a divergence as we've got some rising yields here. That's putting a hurting on some of the tech stocks out there, growth stocks. Not exactly liking the rising yield scenario that we're dealing with. Still, though, we're talking about a NASDAQ 100 trading at 15,000, basically on the dot. The Dow catching a bid, though. Look at this pop. Talk about pushing 35,500. Right now we're up 45 points, 35,416. And the Russell positive by 2249. Bitcoin, some volatility recently. We're down almost $2,000 on the session. We're trading at 44,550. Relatively good action for Bitcoin when you think we were just trading at about 30,000 not that long ago. Crude contract hanging tough. We were just above $69. Talk about an acceleration just this week alone. You trade from 65.15. Early this morning, I was going to say last night, but towards the end of the day yesterday, you accelerate to above $69. You stay over that price level for most of the overnight action. Just at about 5 a.m., you pull back, dip below that level. We're just basically trading 68.96 right now. You get the gold contract. Trading off $2, you make it to a high of 1760 almost last night, 1759.60 to be exact. We pull back a bit. You back it up. Still, you're talking about 1677 was the flash low on Sunday night. Now, that really extended. You back it up to where we were Friday. Let's just back it up even. I'm going to put gold on a 10-day chart to see really the volatility. You're talking about 1835 down to 1677. We're back to about 1750. To see the type of Fibonacci numbers we're dealing with, that was basically the run you had from March. Interesting, folks. Where does that line up? How about that flash coming down to exactly the lows there? You're talking about the low on March 31st in gold of 1677.30. What's the flash low on Sunday night? 1677.90 within $1. Remarkable. You catch a little bit of a pop. Gold, though, still no real upward action so far in this gold contract, trading at 1750. Still a little bit of a tough week for gold. And we jump to notes and bonds. You talk about a trend. Now I'm going to put this. I mean, you see the pop. Let's back it all up to see what I have going on this chart here. If you back it up, this is a weekly chart we got going on to 2018, to the highs we had in terms of when low yields were really coming at us in the depths of COVID for most of early 2020 to late 2020. You spiked to 140.24. We've pulled back to a 382, and that's where you've gotten this bounce in that market. Now, these two weekly bars, though, for some context here, let's just back it up for a 10-day chart. You back it up to 8 days ago, last Wednesday, 135.14. You're talking about a yield. When we had the 10-year trading at 135.14, you're dealing with a yield there of about 1.12%. Well, fast forward, folks, we're talking about 1.37% right now. That's a quarter of a point. Okay, a full quarter of a point in the 10-year, percentage-wise, too. And the percentages on percentages are very deceiving, can be misleading is the best way to say it. But, man, when you're only paying 1.12 and you got to bump that up to almost 1.4%, that's a drastic increase in what you're paying for the cost of capital. That is going to put a hurt on some of these growth companies, because you got to keep in mind, right, if you're paying for a growth company like the NASDAQ 100, for instance, any of the big tech companies where growth, right, PE priced into the growth of that company. Well, if you're paying multiples for a growth company, and all of a sudden you can get much higher interest rates risk-free, and you possibly have inflation in the mix as well in there. Because if you're getting inflation and you're paying for future dollars, which you are on growth stocks, okay, as opposed to a dividend stock where you're paying more for current dollars when you're getting those dividends on a reliable basis, growth stocks, you're paying for future earnings. You're paying a multiple for future earnings. Well, when there's inflation, those future earnings are worth less in real terms. So that's why you see, among many other reasons, growth companies get hit so hard, because you're paying for future dollars that inflation is going to eat away the value of, therefore depreciating the current value of that asset. Something just to walk through as we see it. But man, talk about a move in this 10-year. 135.14, we're trading at 133.15, 2 full points. Now, yeah, we got quite a bounce yesterday on some of that CPI data, but man, since about 4 a.m. this morning, you're talking about down 8 ticks from there, and we're almost right back to where we were prior to the CPI data. You're only about 5 ticks away from that price level at 5 a.m. yesterday morning. Let's jump over to the volatility index in a market that continues to make all-time highs. We got a 1587 print to end the day yesterday, barely bumping up a bit. You're trading at 1612 this morning. Okay, we got CPI data yesterday. We got PPI data out this morning. The bigger number that's getting some headlines, jobless claims, which we get as well. Jumping over to that number and pulling it up, you're talking about, where are we? There we are. 375,000 is the headline number there. So that's initial jobless claims. The headline is falling for the 3rd straight week. When you put it in context, though, we're talking about 12,000 jobs. I think we're down from the prior week. All things considered, yes, that is a declining number. We had, 424, but that was a rise from 368. Okay, I mean, another way to say, you could say down for 3 consecutive weeks, because you go 424, then you go 399, then you go 387, now you go 375. Another way to put that, though, is that we are above the number that we were at 4 or 5 weeks ago, as in there's just volatility. We're only talking about 25 to 35,000 jobs separating all of these numbers going back basically to 5, 6, 7, 8 weeks ago, as the market pretty much stuck at about 375,000 initial jobless claims number. We also had continuing claims. That number going down as well, 2.866 million. You see the decline on continuing. We were at about 3 million the last time. We've dipped now slightly lower to that number, down a bit. Still, we got a lot of people on the economic rules, the government rules, in terms of all those numbers combined. You're pushing, 13, 14, 15 million, I think, and those benefits expiring next month. We'll see how that shakes out as well. They make reference to it in here, talking about the number of insured employment claims, 2.86, a broader measure of continued unemployment, which includes pandemic-specific benefits and other programs, also declining week over week. They don't throw the numbers in there. We'll pull them up later in the show. But nonetheless, pretty much in line. Market just shakes it off as you'd expect. We're trading at about 44.40 in the S&Ps. That number out at 830, and the market doesn't even budge on that number in any way whatsoever. All right, jumping around to what else we got going on in terms of in the market. How about let's jump to some of the stocks. We're going to start off with Palantir, PLTR. We got some companies to go through. I mean, this company, a little bit of a mystery. They can't exactly tell you what they have going on because of the work that they do, but nonetheless, they have revenue soaring. 49% was the headline there from a year earlier in the second consecutive quarter. Raised their full-year adjusted free cash flow outlook to more than 300 million, up from 150 million, but be wary of this stock, because we got highs out there at 45. We got lows of $9 this morning. We're going to open under 25. Stay tuned, folks. We'll come back with Kevin Hicks from Fast Market, TD Ameritrade Network. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&Ps flat right now, 4440. We get the NASDAQ 100 barely under 15,000. The Dow, strongest of the indices, up more than 0.1%. Dow trading at 35,428. Jumping over to some of the data we got this morning. So as I mentioned, we get PPI data this morning. A little bit hot, not quite as important of a number as maybe the CPI may be, but you're talking about a number here of 7.8% from a year earlier. The PPI, Producer Price Index, data showed Thursday, excluding volatile food and energy, the core PPI also rose 1%, a second month of record gains. Compared with July 2020, the core index was up 6.2% for PPI. The advances in the overall PPI and core measure from a year ago were the largest in annual data back to 2020. So that number out at 8:30 as well, not as meaningful, a little bit of a hot number there, but the market pretty much taken it in stride. Now, services inflation, check out this contribution though, almost 3/4 of the jump in the July PPI reflected a record 1.1% pickup in services. The advance in the final demand services was broad and included strength in margins at wholesalers and retailers. Indexes tracking margins for airline passenger service, hospital care, and accommodation also increased during the month. Makes sense, right? But you see it there in the print and the data aligning with that as well. All right, let's jump around to some of the stocks that are making moves this morning. We'll start it off with... I want to start off with DoorDash. Interesting. So DoorDash, interesting here. Instacart. So we have Uber in my newsletter. Disclosure here. Uber's pulled back pretty dramatically. They're down a little bit this morning ahead of the opening bell, pushing about 43 bucks. All right. Now DoorDash been on quite a run since May, from 110 to about 190. They're $2 higher maybe this morning. DoorDash is for the pre-market. Now, interesting here that they were looking at going after Instacart. I use Instacart, folks. A great service for grocery delivery. If you're out there, you do pay a premium. I believe you pay about 10% on every good, right? The prices of the goods themselves are elevated. So let's say a frozen pizza in Publix is going to cost you $7 in the store. They might price it at $7.70 or that at thereabouts on the app. So you're paying that on your overall fee. You're also going to pay some fees on top of that, right? Delivery and whatnot. I ended up paying $99, I think, for the entire year. All of the services have that. Uber's got something like that as well, right? You pay a service for the entire year. That locks you in. They love doing that. Then you probably use their service even more often because you gain value. The more you use it, the more valuable that $100 is I paid for the year. Interesting, though, that they're trying to do it. But why may have talks fallen out? amid concerns that such a deal would have a difficult time winning regulatory approval. Kind of makes sense. Two of the biggest players out there, Instacart, I mean, they've been talking about going public with quite a lofty valuation in a big way for Instacart. Just interesting to see, though, as consolidation in that industry, right? You saw Uber pick up a couple names in there as well, and nonetheless, DoorDash looking to do the same thing. All right, folks, let's jump over to our man, Kevin Hinks, every trading day, 11 a.m. Eastern Time, live on Tiger TV, on the TD Ameritrade Network, Fast Market. Kevin Hinks, Alex Coffey, and the team breaking down the market action, walking you through hypothetical trades, folks. Trade management, they talk about rolling, they talk about trade managing good and bad trades, whatever you got to do, talking defined risk with options, especially during earnings season, during a time we got some volatility in these markets. Kevin Hinks, happy Thursday, man.
Good morning, Tommy O'Brien. Happy Thursday to you. You know, the highest profile name of the week comes out with earnings after the bell today, and that is Disney. We'll also look at Airbnb. That's a relatively new company, and then DoorDash. So we'll look into an old legacy company and two pretty new companies, actually, in Airbnb and DoorDash. So, but Disney, without a doubt, the highest profile name of the day. But, you know, we just had a discussion on the PPI data that came out, Tommy. And although this data is hot, people may be looking at why isn't the market reacting, stronger to this warm number, this hot number? Well, when you have a PPI number that comes out like this, two things can happen to those prices. They can either be gobbled up by the producer, right, and margins go down, or they can show up in consumer prices later. And so it's not always sure that U.S. consumers will see those higher prices in the PPI. Of the four measurements for inflation that we get in a month, it's the wages, part of non-farm payrolls. It's CPI, which is enormously important, now more than ever. It's the PCE part of personal income and outlays. And then a distant fourth is PPI. That's why, even though this is a pretty hot number, you're not seeing the net effect in stocks or bonds, frankly, in notes.
I love how you break it down, man. You've talked about it many times before in terms of the economic numbers that you look towards, for the most impact on the market, Kevin. And that's why we tune into the program at 11 o'clock to get that kind of information, man. You got experience. That's the word I'm looking for in terms of going over those numbers. Because, the trading range on the S&P this morning, just remarkably small, as we're all used to. 44.44, we get a high print in the S&P. Now, interesting, Kevin, do you hear me teasing your DoorDash? I was unaware, but I was talking a little DoorDash as you're coming up. I'm a big fan of Uber, of course, just in my own life, and I have some Uber shares on top of it. Now, DoorDash, I've used them as well. Instacart, I'm a huge fan of, Kevin. We got young kids in the house, right? During COVID, it's nice that I didn't have to go out, but just time-wise alone, man, with two young kids in the house, you're working, both parents. I think I'm on like my 60th or 65th order, Kevin. Every time you order on Instacart, it tells you, and it's a brilliant idea, this is your 65th order. And what they say is every order is about an hour. So you've saved, a week and a half of your life, or what, I'm doing that math, but they show you each one. And it's remarkable how they add up over time. But grocery shopping, we all know, a huge component of what we're spending, the time that you may ensue. But I thought it's interesting. You had DoorDash almost going after Instacart there. They might have some regulatory concerns, but DoorDash has been on quite a run, man. From about 110, we're pushing 190, a little bit higher on that news this morning. Uber shares, a little bit of a flip side there. Uber, very open to the international market, might be a little bit slower to open back up. And then I love looking at Lyft in that conversation as well. Lyft, very domestic, might be able to turn a profit a little bit quicker than Uber in that conversation when you're not dealing with the international woes. As you mentioned, Kevin, we get Disney after the bell. Disney, taking a look at the Thinkorswim platform, we got a $5.71 expected move. For new listeners out there, Kevin, I've asked you to talk about it a couple times before, but I love this number, man. When I first found out about it on the Thinkorswim platform, it's so important if you're trading any type of options at all, and just kind of to have a general idea, even if you're trading the equity, kind of what the market's pricing in. Can you walk the viewers through what this one-day market maker expected move is that appears on the Thinkorswim platform that I'm showing here to the listeners? We got $5.71 today for Disney.
Yeah, that number, that big yellow number that shows up right in the top middle of the Thinkorswim platform is a number that automatically shows up when the implied volatility of the front expiration, which is this is tomorrow's August 13th, and the implied volatility is about 60.5, is higher than the second expiration, which the August 20th expiration is about 37. That implied volatility in the front expiration implies that there's an event in that week, and it measures it. And by that, it gives the one-day expected move from that event. And that's what you see, the correlation between that implied volatility and the one-day expected move. Now, each stock has its own implied volatility. It's like a fingerprint, Tommy. It's its own implied volatility, which correlates based on the price of the stock to its own market maker move. So they're all different. They move during the day as volatility goes up and down, but that gives you a quick snapshot look at the one-day move. Now, it's not the answer to the question. It's part of the question.
You know what, Kevin? We got to run, man.
Event happens and the move happens. So, but
we got to run.
An indication of what the implied vol is telling you, Tommy.
Kevin, man, you walk us through it so great. I got the platform up there, folks. I love how you can walk through whether it's the weekly numbers. We got $5.70 for the move today. For the week, we're talking $6.37. You want 2 weeks of action? We're talking about $8.28. Kevin, man, we appreciate the conversation. We look forward to the show at 11 o'clock. As always, man, I'll be watching for that breakdown of Disney and the markets today.
Have a great weekend, Tommy.
You too, Tommy. Take care. You too, Kevin. Take care. We'll be right back, folks.
Their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tigers Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got the S&P slightly in the red right now. You're negative by just 2 points at 44.38. Dow positive by 29 points. The NASDAQ pulling back a bit. Checking out the NASDAQ 100, a little bit of an acceleration to lower prices on the open there. We're trading at 14,982. The Russell, negative by 2 points as well this morning. As I mentioned, Bitcoin down about $1,700. So I'm going to jump around to the story on Bitcoin. Let's pull this one up. Hold on one second. Where are we at? Here we are. Okay, where are we? Let me make sure I get this right. I think we're over here. Nope, that's my PPI data. Excuse me for the long, oh, what a bummer. Where did my article go here? Nope, I want to talk about that one as well. Okay, I'll have to pull it up. But this has to do with the crypto theft that was taking place, the 600 million crypto theft that took place just in the last few days, where some of the funds are being reported. And man, you just want to be careful, because literally it's talking about basically that, what a bummer, I can't find this. I got too many good articles up here right now. But nonetheless, talking about that half of it's been returned. So here we go. Okay. Hacker behind 600 million crypto heist claims they did it for fun. Man, you better be careful, folks. You're in this decentralized finance platform world when you just have very brilliant, obviously, individuals of some degree trying to find, not even trying to find, finding basically glitches in networks, and just with the ability to just basically take everybody's money. Now, this would be like somebody finding a glitch in like Bank of America's digital code that somehow allowed it to just take all your money. That doesn't happen, and thankfully so. I'm pretty sure that they've buttoned up some of the security holes to make sure money just doesn't disappear. And if it does disappear, it's backed by the faith and credit of the U.S. government if it's FDIC insured up to a certain level. I think it's $250,000. Not much the case here. And when you just get through some of the details of this, pretty remarkable what's going on here. Now, some of this money, it would have maybe been very difficult to become untrackable. People love that they think Bitcoin, it's anonymous, it's untrackable. Not quite the case, folks. As in many times, there are markers somehow that we might be able to track down those people, the money eventually. But nonetheless, we're talking about criminals if you're taking that money. And criminals don't often worry too much if they're able to get their hands on $600 million. Maybe they just think that they can disappear even if there is a trace. Remarkable when you go through some of the details of this. You have the Poly network, not familiar with that myself, okay, but 600 million worth of crypto was stolen in a cyber attack that's targeted that platform, the Poly network. And it gets into, I want to scroll here for a second here. On Tuesday, a hacker, so it's, what's today, Thursday, yes, 2 days ago this happened, exploited a flaw in the network's code, talk about a flaw, which allowed them to steal all the funds. It's just like one sentence, yet that's 2/3 of $1 billion, essentially, $610 million. Poly Network then pleaded with the hacker to return the money, and sure enough, half of the crypto haul was returned by Wednesday. $342 million worth of assets had been returned, according to the network, okay? And this is an update where you have Ethereum, BSC, is that Bitcoin of some degree? I'm not sure what BSC stands for. Of it left, the remaining 268 million on Ethereum, it looks like, is left that the hackers still retain. In a question and answer embedded within the digital currency transaction Wednesday, the person claiming to be the anonymous hacker explained their reasoning for the hack, quote unquote, for fun. When you're spotting the bug, I had mixed feelings. This is the supposed hacker. And it's not even supposed, because I'm going to walk you through next that the person posting these words had to be the person that took the funds, because they're tied to the accounts that took the funds. When I spotted the bug, I had mixed feelings. Ask yourself what to do had you facing so much fortune, asking the project team politely so that they can fix it, question mark. Anybody could be the traitor given $1 billion. Probably more accurate than not. They're saying if you hand somebody a key with $1 billion on the other side of the door, how many people are going to give that key back? It's called integrity, folks, if you do. I can trust nobody. They continue. The only solution I can come up with is saving it in a trusted account while keeping myself anonymous and safe. Nonetheless, they started giving it back, and they talk about the messages are embedded in transactions sent from the hacker's account. The only holder of the stolen assets could have sent them. It's just remarkable, folks. If you're dealing with $1 million or $2 million, it would still be remarkable. You're dealing with $600 million at a time when, and that's not some vast criminal enterprise, folks. When you steal $600 million and you give back $342 million because you're probably a little worried that you're going to go down and spend some time in jail because maybe that wasn't your intention. Nonetheless, story after story just blows you away in the crypto sector as you steal $600 million basically just because they didn't know what to do. They found a loophole. I mean, imagine if you found a loophole in the Bank of America code and you can take $1 billion if you felt like it and then deal with it from there. I don't know. I mean, it's obviously wrong. It's obviously criminal. But you get the point. Those things don't exist, and they only seem to exist right now, talking about in the crypto sector. Not really sure that's an impact of what's going on in Bitcoin. As you've popped a bit, maybe just giving back some of those gains. But nonetheless, we're off about $1,800 on Bitcoin this morning. Okay, jumping around to other stories I got up here. It is earnings season. We'll jump around to some of the stocks with numbers this morning, but want to talk about Verizon. Verizon to offer a free year of AMC to certain subscribers, adding to its stable of streaming promotions. My mom used to work for Verizon. She's got some Verizon shares still in her account for disclosure, but interesting to see. And it is a strong company, folks. I'm a little biased, but it is. Get a strong dividend in a strong company out there, offering AMC for 12 months to new and existing customers who buy a new 5G phone with a payment plan or sign up for Fios Home Internet. You saw Disney do a bunch of this, right? Giving out Disney Plus to people, whether they're signing up for a number of different services as a way to offer it. Verizon already offers Discovery and Disney Plus for no additional charge to certain wireless customers. It's a tough competition, competitive landscape out there, and content, a way that they're trying to bring people in. Streaming offers are a way for Verizon to differentiate itself from T-Mobile and AT&T. I wonder if that's going to play out, though, because most of the time, people have their own ideas of what they're going to be streaming, right? I mean, like, for instance, I'm already paying for Disney in my household, not paying for Discovery yet in my household. But most of the time when people are looking for phone plans, they're actually looking for, what are they looking for, right? They're looking for cost, and they're looking for performance and reliability. I don't know if it's going to be a differentiator in that degree if you get Discovery Plus and Disney Plus for no additional charge. For some people, that's going to add value, and maybe that's the deciding factor. But nonetheless, they're doing that today. Now, Verizon's been pulling back a bit as we've had some Verizon yields going to hurt some of these dividend stocks out there. Putting it on a daily, you were up to almost $60 back in May. You're back to about $55. Let's put it on a long-term monthly, though. This one's I always keep my eye on. A little bit of a channel line, a little bit of a convergence here, not exactly parallel from the highs and the lows, but you can see kind of on that upward channel. Now, this is a monthly going back all the way to basically 2010. Can't get much longer term than that. But Verizon, a strong company in a big way, and looking to team up with Discovery, it seems. Let's jump around to some of the other streamers as we wait for Disney after the bell tonight. Disney trading a little bit lower on the open on their expected numbers tonight, 0.2% in the red. Now, what's interesting is yesterday, as of the close, right, what was the one-day expected move? You were talking about $5.71. Options only reset when the market is open, all right? We were talking to Kevin Hinks at 9:15. Option market not open. All of these numbers were predicated on the close as of yesterday. While market opens at 9:30, more volatility right now than was yesterday. We were looking at $5.71 yesterday. Volatility premium for Disney options going up to $6.16. Stay tuned, folks. Be right back. Go over some of the other equities that are moving today. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps negative by 4 points right now. Tech stocks pulling back a bit. We get the NASDAQ 100 down about 55. Dow hanging on to gains barely. We're positive by 9 points right now in the Dow. Let's jump around to some of the airline stocks that have been moving recently. You got Delta down a bit today after trading higher this week. Delta down about 0.8%. We got Boeing shares down a bit, 0.2% in the red this morning. Jump around United. United shares down 1.2% so far. We got American down 1.5% so far. Jumping domestically, JetBlue down 0.8%. We'll jump over to Southwest shares down about 1% right now. Let's check out the cruise lines. Giving back some of the gains. All of these getting a little bit of a pop in recent days. Cruise lines, Carnival down about 1.5%. And Norwegian down about 1.9%. Volatility over there in those travel stocks in particular. Airbnb, interesting one. Kevin's going to be talking about that coming up on Thinkorswim at 11 o'clock. I like this stock, Airbnb, folks. I do. I think they go public. I think their reference price was not reference price. I think it was their IPO price. I got to get that back. I think it was about 140. So they're just above the IPO price. You did push 220. We're trading at 147. Now, this has quite a lofty valuation at these levels, folks. You're talking about a company that's valued at $91 billion. Okay, whew, that is a lofty valuation, $91 billion. You really got out of hand when this thing was pushing 220. I mean, you're talking about, I think it was a $130 billion company at those price tags. They're the industry leader. They are in a big way. And it'd be interesting to see as we come out of COVID where things progress. And they've talked about on Thinkorswim times before, and I look forward to the conversation they're going to have at 11 o'clock today, because one of the things that really ramped up, Airbnb, right, VRBO, is the ability to rent homes at maybe a more affordable price than going to a hotel, or at least as affordable. And if you've used it at all in the past, and listen, I used it last October, took a great trip to Tennessee and the mountains up there. COVID was still, spreading, so it was nice to be able to get away in a vacation without having to go to a populated hotel if you didn't want to be around so many people back then. We're going back to October of last year. But the fees, that's what I was getting to. The fees in these companies are just inordinate, folks. Now, during COVID, they have special cleanings you can do in terms of some of the different available places do special thorough cleanings, and you're paying sometimes $200, $300 just for a cleaning, let alone a service fee on top of that you're paying Airbnb. You add it all together, and it's just a very, very lofty price tag that they're dealing with. Interesting to see how that weighs, but Airbnb jumping around between about 130 and 150 recently, going all the way back basically about 3 months ago. And again, I think it was 140 that they go public there. Airbnb sitting down about 0.2% today. All right, let's jump around to some of the other equities out with their numbers today. We'll start off with Utz Brands, the snack maker, familiar with those chips. Down almost 5% in the pre-market. We'll see how it opened. Missed the estimates by 2 cents a share. Quarterly earnings of 13 cents a share. Revenue beat forecast. Continued strong demand for its products, but also expects costs to remain elevated for the remainder of the year. UTZ is their symbol. Cost is going to be a big one, folks. There you go, down 5.6%. We do get a bid on the open, though. We're up to 1965 from almost $1 lower. Yeah, even more than $1 lower on their numbers this morning, down to 1857. You put this thing on a 3-year weekly, you were up to $30. Talk about losing some value there as we've cut. Yeah, is this going back? So what did they just go public? Is this supposed to be a 3-year weekly? Let's put a... Yeah, they sure did, or something happened, because I'm only going back to about August of 2020. But man, you run up to 3009, and just like that, we're back to 1932. Costs going to hit margin, and that's going to be a common theme, folks, as we progress. eBay out with their numbers. I believe they were trading higher today. Where are we? Down 1.5%, putting it back on a 15-minute. Yeah, initial spike last night up to 72.50. Then you trade a bit lower. We did spike higher on the open. We're down about 1.5% on eBay. Bumble, the dating service, BMBL, they had just gone public earlier. They're down about 3.2%. There's your full chart of Bumble. You go public at about 84. You trade down to 38.91. You're trading at 46.09 right now. Be careful on this equity. That is a downward trend, folks. You don't have to be a master chartist to find a downward channel on this chart, right? Pretty well defined here. Taking a little bit of linear regression, matching up maybe the lows and the highs. Not sure where you line up. The upper boundary on there, though, nope, we don't want to be doing that. The upper boundary on there, though, pushing those levels, you might get a little bit of a pop. Even your pause talking about $52 would be the upper boundary line, but I'd be careful on this equity, down 3%. Now, as to what they had to say, they lost 6 cents a share. The estimate was a cent a share profit. Revenue top forecast, as its paying numbers jumped 20% from a year earlier. Upbeat current quarter revenue guidance. They were positive, but not so much. You get something going on in that equity, folks, there. Now you jump over. You're talking about a company right now valued at about $5.5 billion. That's a big valuation for some of these dating companies. Match Group, for instance, you jump over. They own just all of it. $38 billion you're talking about. Match Group. But as you can see, waning a bit from the highs. We were just at about 170. You're down at 140. Match Group pushing the bottom line of that consolidation it's been in for the better part of this year. Okay, continuing the trend, seeing what we have going on for earnings. Sonos, they're positive in the pre-market. We'll see how they open. Surprise profit, 12 cents a share. Market had been looking for a loss of 17 cents. Strong current quarter and full year sales guidance. I guess they're selling speakers, right? Is that what they sell? Sonos. S-O-N-O. Yeah, they give it back on the open, though. We're up 6.5% still. But look at that trade on the open from 39 to 37.15. They're out with the numbers last night. You pull up the Analyze tab. Yes, multi-room home audio systems, wireless speakers, home theater speakers, the whole likes. You're talking about a $4.6 billion company. Now, here's some context here, right? Most people, I'm familiar with Sonos Group. I am. They get some good speakers. I might even have some in my house. They're a $4.6 billion company. Bumble's a $5.5 billion company. Of course, it's all predicated on revenue and profits, folks. But just keep those types of things in mind every time and then you look at Airbnb. You know, a dynamic growth company that's taken over the world, probably rightfully so. You're talking about a $100 billion market cap on that company. All right, continuing, jumping down the line. Some of the companies that we were talking about, we talked about DoorDash. Yeah, interesting, some of the companies out. So we have Open Door, trading higher, reporting it lost 24 cents a share for the quarter, 10 cents less than the market was looking for. This is home buying and selling company, better than expected revenue, and an upbeat current quarter forecast. Open is their symbol. Let's see how. Yeah, you're up 14%. There's an acceleration for you. Now this thing, look at the run we've had, though. Be careful on this equity, folks. We were just up to $40 in February. That bounce that we get today, up 13%, you know, strong numbers. But, man, you got a lot of headwind to get above where we're trading at right now. Let's see. Is that as far back as I go? No, you can back it up even further. Yeah, it looks like this thing came public June of 20 somehow. You skip around at $10 before plowing higher to $40, and we're back to $16 on this equity. All right, let's jump around to some of the FANG stocks, see how we're trading right now. We got all the markets in the red. Dow was leading the way, but not so much anymore. We got Amazon down about 0.4%. We got Microsoft shares positive, one of the positives. Google shares down about 0.3%. Apple shares, look at that pop in Apple. Apple up about 0.9%. Even with that, you get the tech stocks trading lower across the board. All right, folks, stay tuned. We come back after the break, finish up the program, see what we got going on. We'll look at Disney one final time as they get their numbers tonight after the bell. Stay tuned, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets pulling back a bit on the open here. S&P's now negative by 7. We're kind of below where we were trading at the lowest pre-market. That price tag was about 44.35 at about 3 a.m. Eastern time. We're lower than that level. Next stop could be about 44.30 in the S&Ps. That's where we caught a bid yesterday at about noon Eastern time in the markets. We're about 2 points away from that price level right now. Taking a look at NASDAQ 100, actually below that level now. You get to a level yesterday, we were talking about lows of about 14,963. We're currently trading right at that level, 14,965. The Dow makes a new all-time high today, 35,428 on the futures. We basically open right at an all-time high of 35,400. We get back some of those gains in the Russell, pulling back as well, 2234. Talked about Disney. Disney shares down about 0.2% coming into their numbers. Talking about the move, $6.10, basically priced into the options for their earnings tonight. Speaking of trading, coming up 1 week from today, folks, we have our man Larry Pesavento. He's going to be doing a live trading webinar. He's done some of these before. Now, for those of you who attended Larry's prior webinar, just his prior webinar, just the singular prior webinar in March, okay? We had a bunch of great attendees that signed up for Larry's webinar in March. You're gaining access to this event, okay? Larry extending that invitation. The cost of this, folks, $295. You get a month of his newsletter. That's a $97 value right away off the $295. I encourage you to check it out. Larry's going to be in there for 5 hours from 9 a.m. till 2 p.m. Eastern Time, a week from today, next Thursday, August 19th. You can sign up now. When you sign up, you immediately gain access to his Fibonacci 24/7 trading service. You'll have that for the week leading up to things. You'll gain access to the 5-hour event. Larry will be trading live in there as he's walking you through his entire trading methodology, folks. I encourage you to head on over here, click on the link to see what Larry's going to be talking about. All right, he really walks you through, how he trades the markets, whether it's using ABCs, using it for risk management, for expectations of the next moves. All right, the 3 patterns to help identify shifts in supply and demand. All that on the front page of TFNN. Check it out. Sign up, $295. You get a month of his newsletter, and you're in there a week from today trading live with Mr. Larry Pezzavento. All right, folks, thanks so much for tuning in. Starting your day with me. Stay tuned. We got Basil Chapman up next. Live program all day at TFNN. Right back, please.